Welcome back to the Best Worst Thing podcast. I'm your host, Josh Walewa. My next guest is a financial planner and member of the Bank on Yourself organization, and also the founder of Financial Asset Protection. He helps real estate investors, business owners, and full-time employees grow safe and predictable wealth regardless of market conditions using financial strategy that has been around for over 160 years. And so Sarry started his journey when he was in grad school completing his MBA. He's worked with companies like Allstate, Blue Cross and Blue Shield, Cigna HealthSpring, and Humana before founding Financial Asset Protection, a financial services firm that focuses on one sole concept, the Bank on Yourself concept, also known as the infinite banking concept. Welcome, Sarry Ibrahim.
Hi, Josh. Thank you so much for having me on. I appreciate it.
Well, I appreciate you being here. So let's just jump right into it. If you can just share with us a little bit about your work with financial asset protection and your current role there.
Yeah, definitely. Thank you for that. So as you mentioned, I run a company called Financial Asset Protection. We're a financial services firm. We help clients in all 50 states grow wealth over the future. And a lot of our clients are real estate investors and entrepreneurs. And I got into this field about 6 years ago when I was doing my MBA. My background was mostly in the insurance field. And then from insurance, I kind of merged into financial planning because of my passion for money and solving problems. I really saw this as kind of like a needed space, you know? And I saw this as an opportunity to help people grow wealth outside of the stock market and in less volatile places. So that's what I do now. I help a lot of real estate investors and entrepreneurs grow wealth. I also started a podcast called Thinking Like a Bank. And the point of the podcast is to spread more financial awareness about some strategies and principles that banks use. And I appreciate being on the show, and hopefully we could dive into whatever it is you want to talk about. We could talk about Bank on Yourself and entrepreneurship and any other area you'd like to discuss.
Thank you for sharing that. I'm really curious about what made you decide, it sounds like you started in the insurance space and then pivoted into financial planning. I'm kind of curious about what your motivation was to get into that direction. Was there a particular thing or a particular set of experiences that pushed you in that direction?
Yeah, definitely. So while I was working in the insurance field, working with clients who I started to become very comfortable talking to people about money, and then vice versa. People started to become very comfortable talking to me about their money. So I saw this as a way of leading to the next step. So I was kind of this junior associate helping clients with just auto insurance, homeowners, some commercial insurance. And as I started to work my way up, I started to be more comfortable talking to people about money, since it obviously is a very sensitive topic to talk about, but people still talk about it when they feel that they could trust somebody. And I saw that kind of as a connection. I started connecting with people. I don't think I'm that smart. I just think I'm very passionate. I like what I do. I enjoy what I'm doing. So it kind of clicked really well with clients. And then I wanted to take it to the next level, to get into financial planning. I read the book, The Bank on Yourself Revolution by Pamela Yellen. And that's what kind of opened my eyes to the problems with financial planning. See, in most situations, when people go to a financial planner or a financial advisor, it usually results in investing in stocks, bonds, or mutual funds. That's the majority of the time what happens. And I see that it's problematic because that's not always a good fit. I'm not saying that investing in the stock market is always problematic. I'm saying that it could be, it's not always a good fit for everybody. So it really takes, in financial planning, you have to really understand the person and take a step back from what your objective is and really focus on their objective. Like really ask open-ended questions. The question part of the financial planning process is the most important part. It's also the longest part. It's far greater than the presentation part. So for example, dealing with the client on a typical basis, we have like a 60 to 90 minute financial analysis call. That's just me asking questions, getting to know the client. There's no recommendations or advice during that call. I'm just simply understanding the client. I'm asking questions like, what does the word retirement mean to you? When do you plan on retirement? What are some sources of expected income in retirement? How do you feel about the stock market? How do you feel about taxes? Do you think taxes are going up or down in the future? What was money like growing up for you? And I'm asking all of these questions to get to know the client's financial situation. And then we make a recommendation. So I started to become comfortable with all these things. And I think that it's a good match. I'm finally doing something that I feel like, I've always wanted to do. I just didn't know what it was called. So now I found it, and I'm glad to be doing it. And I've been seeing a lot of positive results dealing with people.
Well, I can imagine that has to be great, especially with the passion you bring to this world, to be able in this work to be able to see those results. It's interesting, the questions that you talk about. To me, it's almost like you're a coach or a therapist in a sense, because you're really getting underneath the skin. You're trying to, in the brain, and trying to figure out people's kind of thought process and feelings and projections on money and all things money. I'm kind of curious about, is that from the book that you read and some of the training that you've approached, or what really kind of developed your style of approaching clients like that?
Yeah, definitely. It's a good question, good observation. So I definitely, I consider myself more as a financial coach rather than a financial advisor. And the difference is, an advisor would simply say, all right, this is the best thing to do. Do, solution A or do solution B. Whereas a coach would be like, what do you think is, what is it that you've always wanted to accomplish? It's a more open-ended. It's more of the client is in control of their solution. I'm just that kind of cheering them on and coaching them throughout the process. And I do that for two reasons. One, because my background in entrepreneurship has always been around, I realized early on in entrepreneurship that I needed a coach. I worked at a company, and I was an employee at a company, and the manager hired an outside coaching company to help me with sales training. And then that kind of, it worked very well. And I think that it was because of the sales training. We had exercises. And then after that, I realized, what else you could do with that kind of mentoring and that kind of training. So when I became self-employed, the first thing I did was I hired a coach. And I noticed coaching patterns, and then I started to hire different coaches for different areas, like one coach for more sales and marketing, another coach for more on the entrepreneurship side, another coach for like on the startup business side. So I started to have different niches for our different types of coaches. And I saw like a common trend, and the common trend was they would ask, what is it that you want to accomplish? Why is it that you want to accomplish that? How are you going to accomplish it? And then I started to say, look, I'm going to do, X, Y, Z. I'm going to write it out this way. I'm going to do this so that way this doesn't happen, or I'm going to do this so that way that happens. And now I'm commanding myself through there. I'm commanding myself to take action on certain things. And then I saw that as the power of coaching. That's one side of it. And the other side of it is because of the way I was trained, bank on yourself and infinite banking. It's not so much of a conventional way of planning. It takes really a way of understanding the client. And I think that that's another problem in financial services, is that there are too many preconceived judgments or objectives with clients. Like, for example, a client will make an appointment with a financial advisor, and the financial advisor already knows what he or she is going to advise the client on. It's typically going to be stocks, bonds, mutual funds. They know that. So whatever the client says, and I'm not bashing financial advisors, there's a lot of them that do wonderful jobs out there. I'm saying that this is one particular problem in the industry overall, generally speaking, is that the ideas and the recommendations are already like cookie cutters. They're already predetermined. So no matter what the client says, it's going to result in, okay, let's allocate, $1,000 a month in the stock market, or let's do $10,000 a year in the stock market, or something like that. So I saw that as a problem, and I want it to be open-ended. I want the client to tell me what it is that they want to do.
Excellent. Well, it's interesting. Your approach really suggests many vehicles for building wealth, such as real estate, whole life insurance, and more. And, when it comes to approaching the work that you do, helping people gain their financial security and wealth, it sounds like you do a lot of listening. These are really interesting things. I've heard one. I have another friend who's also leaning into this field as well, and some of those areas are the same ones. And I'm kind of curious about why not just the stock market or traditional retirement plans. Why are these other vehicles pretty powerful ways of developing both financial security and future wealth?
Yeah, definitely. And, with each method, there's about 450 financial vehicles or instruments that one could use. So for each one, there's pros and cons, just like anything else. There's pros and cons to each one. And then sometimes it could be connected in different ways. Like, for example, you could do whole life insurance, and then from the cash value of whole life insurance, use that to invest passively in real estate. There's different things that you could do like that and connect them together. So in other words, there's a lot more you could do than just a few options. And there's pros and cons to them. Like, for example, why doesn't everybody just invest in the stock market? Plain and simple. Well, there's a couple of issues with that. And number one is volatility. There's risk involved in investing in the stock market. And there's different types of instruments. Like, for example, there's a difference in risk levels between a mutual fund, an index fund, an ETF, or just buying, individually owned stocks. So there's a difference of risk level and preference for each one. So you really have to understand that. And then another downside to it is the tax implications. So let's say, for example, you have a 401k or IRA that's invested in the stock market. Those are typically pre-tax solutions. So you're deferring taxes this year in the given year. So let's say you make $100,000 a year, you're putting $10,000 into a 401k, you defer taxes that year. So you bring your tax liability down to $90,000 that year. The problem with this is now you have to pay taxes in the future, which draws the next question of what do we think tax rates will be in the future? I think tax rates will go up based on the Social Security budget, based on Medicare budget, Medicaid, and other federal things that are going on as far as budgets are concerned. So I think tax rates will definitely go up. We're already starting to see the upper tax rate go up right now to 39.6% for capital gains and for an ordinary income tax. So we're already starting to see trends right now. So I think that there's pros and cons to each method, and you really have to identify each one. And I think that it has to really be open-ended, and it has to be like in the best interest of the client. Because think of it this way: what if you go to the doctor's office, right? And as soon as you walk into the doctor's office, the doctor's like, "I have the prescription ready for you. It's right here." And and then you're like, "I didn't even tell you what was wrong." The doctor has to ask you questions. They have to diagnose. They have to come up with the conclusion. And then after they come up with the conclusion, they have to recommend something that's relevant to your situation. Do you have any pre-existing conditions? What's your height, weight, other factors? They have to put all these things into consideration before making the recommendation. And the same is true with financial planning. It's no different. You have to really ask open-ended questions, get to know the client's financial situation. And then out of all 450 vehicles, choose the right one or two or three or sometimes more, and connect them together. That's going to be relevant to the client situation.
That's just a great metaphor. And I appreciate that. I think a lot of people listening can really connect with that as well. So let's talk about financial failure, because for me, my experience with financial failure was really a psychology issue, right? It was something going on between my brain, and I'm not necessarily some of the higher wealth investors that maybe you work with, but I'm kind of curious about mindset and how you see mindset and psychology impacting people's financial decisions.
That's an awesome question. I think 80%. So that's the ratio, 80-20. 80% of becoming financially successful and reaching your financial goals is relevant to, it's connected to about 80%. 80% of that is mindset. So the majority of it is the way you feel about yourself and the way you perceive the world and the way you perceive your money and what you're able to do. Is 80% of that is finding financial freedom. 20% of that is the work you do, the type of business you own, the clients you have, the degrees or certifications you have, where you're located in the country or the world. That's 20% of it. But 80% of it is your mindset and how you believe in what you believe in. And then to kind of elaborate on that is that, think of it, let's say, for example, you want to argue. Let's say that that's not true. It's majority the other things that you can't control and not things you can control. Look at people who win the lottery. Most of the time, people who win the lottery end up in a worse financial situation than they did before. I think it's like over 80% of people who win the lottery end up bankrupt. Like 5 years later, they end up in a worse financial situation because they didn't know how to handle the money. They didn't have the mindset for the money. They didn't know really what to do with it. They just became ultra consumers. They went from consumers to ultra consumers, from spenders to ultra spenders, So that was, that's how most people are built because of their mindset, the lack of the training around money and how they perceive money. And the same is true when you look at people who, for example, inherit a lot of money or get life insurance, are life insurance beneficiaries, and they get a lot of money in a very short period of time. Most people end up in a worse financial situation. Even if it's hundreds of millions of dollars, they end up in a worse financial situation. It sounds counterintuitive because you're probably like, oh no, give me $100 million right now and I'll be happy. Well, more than 80% of the time, you can result in a worse financial situation because of the lack of training around money. And then flip the entire script over. You have people who are billionaires and multimillionaires who came from nothing, who immigrated to this country with $50 in their pockets, who were refugees, who and ended up becoming billionaires and multimillionaires in North America. So it's all about the mindset. 80% of it is mindset, and then 20% of it is all the other things that you have control over, but you have little control over. But the majority of it is the way what you know about money, how it works, the mechanics of it, and then how you feel about it. Your perception of the world and your perception of money is for sure. That is the majority of it, and that's what successful people focus on. They focus on the 80% of that. They read books, they listen to podcasts, they watch YouTube videos. They learn more about themselves and more about money.
You really know this world. I mean, that's exactly what pulled me out of that mindset. Was reading, was reflecting, was podcasts. That's just there's so many resources out there, including you, who can really work with people to help them walk through those issues. I mean, I think, I remember reading a book that talked about, I think it was, I'll exaggerate the numbers here, but if you can't budget 20,000, you're not going to be able to budget 120,000 because of mindset. And so you don't have to have all the money. You can start right now with behaviors and practices and small investments. And if you can start with where you're at right now, you'll find yourself in a better position, in a better place down the line to be able to do more and to develop more and to gain more. And so I appreciate that take. So I would just briefly want to talk a little bit and switch gears about you, like your background. What's your backstory? Where did you grow up? Your kind of family background? Can you, whatever you're comfortable sharing.
Yeah, definitely. Yeah. So I grew up in the South, in the southwest suburbs of Chicago. For those of you who are familiar with Chicago, near like the Orland Park area. And I grew up to an immigrant family. My family's from the Middle East. I was born in the States and we grew up middle class. We didn't grow up wealthy, didn't grow up in poverty either. We're thankful for that. But I grew up conscious about money. I grew up, with a saving mindset, kind of almost on the scarcity mindset that money is irreplaceable. So that's how I kind of viewed money growing up, is that if you spend it, it's going to be difficult to recoup it. It's going to be difficult to bring it back, how that immigrant mindset. Yep. And I think that could be problematic, right? There's good and bad in that. It's good because you have a tight grip around money, but it's also bad because that prevents you from taking unnecessary risks, and taking necessary risks. It prevents you from typically entrepreneurship. A lot of people who grew up in the same area as me and the same way as me through immigrant family from the Middle East didn't really promote entrepreneurship that much. They wanted their kids to get corporate jobs and, work high-paying W-2 jobs, go to college, stay on the conventional, the American dream route, and the ones who, a lot of my friends did become entrepreneurs. And at first, their parents didn't really support it. They saw that, as unnecessary hardship. It was it was very difficult coming to this country. A lot of our parents are entrepreneurs. So it was very difficult being entrepreneurs. And they wanted us to kind of take the better way, the more efficient way. But I don't believe in that. I don't think that, in my opinion, sticking through the conventional route is always going to help you out. It could in some situations, like if you're a doctor, lawyer, engineer, some situations you can, but also I do promote entrepreneurship. I think that, if it's something that you truly want to do, it's something to go for. And I did that, now my family supports me, after I did it, but in the beginning, they didn't want me to, they saw it as unnecessary hardship.
Yeah, I can imagine that. I'm an immigrant as well. And I can imagine taking the safer conventional route, going and getting an education in particular programs and having a steady job versus taking the necessary risk to go out on your own and be an entrepreneur would definitely be something that I can imagine plenty of people who are considering entrepreneurship are considering, right? And those who've had similar experiences. I've had other people in the business world who've had similar experiences of taking that big risk, even though everybody around them was doubting them. I think families have the best intentions in mind. They know what works, right? Consistent, you can make a living, you can do fine for yourself one way, but if you have a passion like you have, then you just have to go for it.
Exactly, absolutely.
So, hey, I want to just take a real quick break here, and then we're going to jump into the big question.
Yeah.
All right, Sarry, as you know, this is the Best Worst Thing podcast. First of all, I just want to say thank you again for joining us for this episode. And at the end, we'll give a chance for people to free to share how people can get a hold of you for your services and just to follow you. But the big part of this interview is where we talk to our guests about a personal or professional setback. And what we want to know is, what was the setback? How did you get through it? And what did you learn that you'd like to make sure the listeners walk away with? So Sarry Ibrahim, what's your best worst thing?
Best worst thing. Let's see. I've had a lot as an entrepreneur. I've had a lot. One thing I can think of is before entrepreneurship. It was one of the reasons why I became self-employed at a young age, and that was so I graduated college with a bachelor's degree in criminal justice. And towards the end of the program, I didn't really see myself doing anything in law enforcement or anything in the criminal justice world. I became super, like my last year in college, I became really attracted to business and I wanted to kind of have a rewarding career. I wanted to, and play in generic terms, I wanted to make a lot of money. And I started to do research and I wanted to just finish my bachelor's degree. I didn't want to change it then. So I continued with the program. I continued with my senior thesis and all that stuff. But I started to do a lot of research on like sales jobs, like software sales jobs, because I saw that as, one of the highest paying jobs. And I just I wanted to dive into the business world, like very little business experience. I didn't even have a business degree. So I graduated with a bachelor's degree and then I started applying for software sales jobs. And I got 2 interviews over the phone. I didn't even make it to an in-person interview. And both of those interviews went terrible. Like I didn't even know how to speak. I didn't know how to answer the questions. And like in the interview, I was going to tell the person interviewing me, yeah, I probably didn't get the job right. Like that's how bad it went. And then, they said, both of them sent me an email, like, we're going to go with different candidates. We're looking for, more experience, at least some experience in communication. So then I told myself, you know what, I want this to never happen again. I never want to be in a situation where I can't even explain myself, or I can't even elaborate or talk. So, and I wanted more experience on business. I didn't want anybody to tell me I didn't have enough experience in communicating with people about business. So I decided to jump into an MBA program. I went to an MBA program. While I was doing the MBA program, I wanted to get, a lot of real world experience in business. So I started working at Allstate Insurance. I was in sales and marketing. Everything I wanted to do at that point, after those 2 rejections I got, because they hurt so much, I wanted to do everything much bigger at that point. I wanted to solve my problems by making more money, by getting more education, by helping more people. I wanted to do things on a much greater scale at that point. And that's why I think that was a huge impact on on entrepreneurship. I never wanted to be turned down for anything. I want to be the person qualifying people and not being qualified for other people. You know what I mean? So that kind of, at a young age, I'm thankful those 2 major rejections happened, because had they didn't, let's just say I got one of those jobs, then I would probably have this mindset of I'm qualified to work for people, and I would kind of stay in this qualified lane. But I wasn't qualified at that time, and I wanted that never to happen again.
That's a interesting and hard thing to admit after the fact, I'm sure, is I wasn't qualified, right? Mm-hmm. Like looking back, I wasn't ready I didn't have the experience. I couldn't communicate my experiences. And at the same time, not getting those 2 opportunities, even though there's a couple of things I'm thinking, not getting those 2 opportunities really pushed you. Like it was almost like it stoked a fire in you that said, okay, well, you know what? I don't want to be in this position again. So I'm going to do everything in my power to make sure that I'm in a position to be qualifying other folks, to be able to help and support other people, and to not have to be beholden to somebody else's opinion of me, because I'm going to be at my best, which is really, really cool. The second thing is just I'm this bigger. You wanted things bigger, and so if you can, so tell me, what's your vision? What do you see for yourself in the future, and kind of what's your ultimate dream in this career?
Yeah, I see being very transparent with you, I see myself becoming a billionaire. I want to become a billionaire. I want to help as many people as possible. One of my goals, I want to start a national not-for-profit organization that helps people with all their financial problems for free. Whether somebody's going through foreclosure or eviction or bankruptcy or credit card debt or student loans, whatever situation they're in financially, the national not-for-profit organization will be able to help them out. And we'll take our only source of revenue will be through donations. We won't charge customers anything. It'll be 100% for free with very professional help, all done virtually in all 50 states. That's one of my goals that I have. Another goal is I want to grow my company greater. I want to be able to help more people. I want to even focus on immigrant families, minorities in this country, and be able to, help. They're usually, they're a very underserved market when it comes to financial planning. Usually, financial advisors and financial services professionals are dealing mostly on affluent clients. They want to deal with people who have money. But what about the people who want to become wealthy? That's what I want to focus on. And I want to, every goal I have, I 10x every goal I have. So everything that I want to do, I multiply it by 10, and even greater than that, to make sure that I'm never going to settle for something lower. I never wanted to reach my actual goals. I always want to multiply them by 10, and then maybe end up with half of that. Always.
That means you'll end up way ahead.
Yeah.
Well, what's great about this, again, you said, I want to be a billionaire, but you didn't say I want to be a billionaire so I can just be a billionaire. You want to be a billionaire so that you can help people.
Absolutely.
And that a rising tide, I guess raises all ships. You really want to help. And especially those underserved communities and folks who are struggling to figure it out. I can really hear your passion in that. And I do believe that in you, and that this is something that you will accomplish in your lifetime. And I'm excited to follow your journey along that way.
Thank you. I appreciate it.
So, Sarry, there's a few things. One is, if people want to work with you directly, how can they get a hold of you? Also, if you can share your podcast information and any other contact information.
Yeah, thank you for that. So the best way to reach me for a free 15-minute call, you can go to Fin Asset Protection. It's FIN, assetprotection.com. There you could schedule a free 15-minute call. There's this button to schedule now. You can schedule there. You can connect with me on LinkedIn through the website. You could connect with me on YouTube through the website. And the name of the podcast is Thinking Like a Bank. You can also find that in the same website, finassetprotection.com. The podcast is up on all major platforms, including YouTube. So I guess the best way to reach me is finassetprotection.com.
Perfect. Direct, nice, and easy. Sarry, thank you so much for your time. I'm going to put you on hold here, and I appreciate your time again. Thank you for being with me.
Thanks, Josh.
Thank you for listening to the Best Worst Thing podcast. I'm your host, Josh Walewa. Music is produced by Josh One. You can follow him at Boomnote on Instagram and Twitter, and Josh One on Spotify. Our episodes are edited by Cool Jets Audio and Visual. You can follow them at Cool Jets AV on Instagram. Our marketing is designed by Francesca Daniels. You can find her at FrankandKitty24 on Instagram. And our overall design is by Inspired Design with Ryan Daniels. You can find them at getinspired.design on Instagram. Thank you for listening to The Best Worst Thing.
This one's for the good times and this one's for the bad. This one's for the day that was the best we ever had. This one's for my good friends and this one's for my foes. The ones who get up on your skin and